Great. So hello, everyone. Thank you for joining the Impact Capital Forum's webinar today, The New Majority, Investing in Founders of Color. My name is Mabinti Cora Miller, and I'm a proud board member of the Impact Capital Forum. I'm also the CEO of a business called Live Africa, which stands for Legacy Impact Venture Enterprises that specializes in impact measurement and management using a gender lens, working with investors and entrepreneur support organizations, and working to drive more capital to African women-led businesses. I am delighted to call in from Nairobi, Kenya, and it was excited to learn about this dynamic panel and this forthcoming discussion. But before we start, I would like to tell everyone a little bit more about Impact Capital Forum. It was founded in 2003 and based in New York City as a nonprofit organization. It was formerly called the Microfinance Club of New York. We are a network of 3,500, providing a thought leadership and collaboration platform, offering webinars, in-person events, as well as working groups discussions on everything from opportunity zones to gender smart investing, and our forthcoming working group, which is impact investing across Africa. So we're delighted to offer these types of events and encourage everyone to visit impactcapitalforum.org to learn about our forthcoming activities. And while you're there, consider joining as becoming a member of our organization. So we are delighted to have this discussion and encourage participants today to pose questions. And we will also record the webinar and share it via email if anyone missed any parts of today's discussion. So with that, I am so honored to introduce our moderator, Krista Williams. She is Senior Vice President and Investing Principal at Citi's $200 million Impact Fund. She leads investments for the fund's financial services vertical, as well as Citi's 50 million Black Entrepreneurs program. Prior to joining Citi, Christy covered consumer finance companies as an equity research analyst at Jefferies and supported companies in their capital raising efforts as an investment banker at JP Morgan and RBC Capital Markets. Krista earned a BA from Michigan State University and an MBA from Columbia Business School. We are delighted to have you, Krista. And with that, I hand it over to you to kick off today's discussion.
Thank you, Mabinti. I'm really excited to be here again. At Citi, we invest out of a $200 million impact fund and recently launched a really great initiative that's $50 million worth of capital that will be invested exclusively in Black founders. I will be leading those efforts, and I'm incredibly excited to have the conversation that I'm having today. I wanted to start by first thanking the two incredible women that are sitting on the panel today. We have Cora Miller, who's the founder and CEO of Young King Hair Care, a CPG brand that has presence in both Target and Walmart. And also Melissa Bradley, CEO of Eureka, as well as 1863 Ventures. So Melissa actually has a perspective of a founder, an entrepreneur, and an investor. And with that in mind, I would really like to dig into both of your experiences today. To start, I'd love to know from both of you, can you tell me a little bit about your companies and why you started them?
Yeah, I can go first. Well, hello, and thank you so much for having me today. So Young King Hair Care, as you mentioned, we are a multicultural beauty brand for young men, and we launched in December 2019. Started this company because I was inspired by my son. I was looking for products specifically to help me style and take care of his hair. And I found, surprisingly, when I looked in the market, that there were no products specifically tailored and created for boys of color. This bothered me for a number of reasons. I think representation is so important. I think you should be able to see yourself in the products that you use. And so working in my corporate job at the time, I was VP of External Affairs for a large healthcare company. I decided to take this entrepreneurial journey and really start a company whose whole mission is to redefine male grooming for the next generation of Black and brown men. And so excited just within this first year, we are now in Target and Walmart and continuing to carry out our mission of really uplifting and impacting boys of color.
Fantastic. And Melissa?
Well, first, let me just echo, it's a pleasure to be here, and such a huge fan of Cora and her work. So thank you for allowing me to share this with you. So again, my name is Melissa Bradley, and I have the privilege to be a co-founder of Eureka. And Eureka is actually based on my experience at 1863 Ventures, which is a nonprofit organization, and realized that with most accelerator programs, the business model is one to many and not one to one. And the reality is that particularly when you're working with women and entrepreneurs of color, there is not a well thought out path of success, and our trajectories, our needs, our experiences are very different. And it's hard to have this one size fits all platform that can help folks. And so Eureka really evolved out of a desire to create curated coaching and support for entrepreneurs of color in particular at the onset, as well as women entrepreneurs who did not fit the mold of go call a bro and get them to give you the money, go to the golf course, go call your alumni, and all is going to work well. And so the idea is that it's literally a tech platform that matches entrepreneurs with their peers, with coaches, as well as with capital to help them grow and scale their business. And so we've been around since November 2019. We have over 10,000 folks on the platform. We've delivered over $100 million in capital to our entrepreneurs. Over 85% of the folks on the platform are entrepreneurs of color, mostly women. So I'm happy to say that we are a for-profit company who is able to still meet my personal mission and passion, which is to be able to help underserved entrepreneurs who, honestly, in this framing of new majority, are the fastest growing entrepreneurs in this country. And it's great to have a business that can actually focus on them.
Fantastic. We'll talk a little bit about fundraising today. Before we dig into that, I'd love to know a little bit about your current fundraising journey. So which stage of fundraising both of you guys are in, and how long you guys have been raising money. We'll dive a little bit into what those experiences have been like shortly.
Yeah, so for Young King, we are just wrapping up our seed round. We kicked that off. Thanks, Melissa.
Congratulations.
Thank you. We kicked that off at the end of September, kind of beginning of October. So from then until present day, it took about 5 long months, which I know for some it's taken longer than that. So in that sense, we were blessed and fortunate to be in the position we are in. But it definitely was a long journey to get here, and I can share certainly more later on what that looked like for us.
Great.
So we raised our first round. People call it different names. I'm just going to say round 1. And it was, we raised that at the top of 2020, before the pandemic and before George Floyd. And so now we're back in the market looking for our second round of funding. And I would say, I'll just say briefly, how was it? I would like to believe that Cora's path was a little bit easier than mine post George Floyd, that people, that the understanding and the belief and the signal effect and the value of Black entrepreneurs significantly shifted, unfortunately, on that fretful day. Because certainly before then, it was a very challenging process in both being a founder of color and trying to convince investors that I wanted to help other founders of color, since we are typically not very highly valued, or is there a belief that there's value in our communities, which is obviously counterintuitive to most venture capital investors.
Great. I want to share a stat with you guys very quickly. In the US, Black founders receive less than 3% of venture capital funding. That's in spite of being 13% of the US population. That number is reduced to just 0.64% for Black women, numbers that have largely remained unchanged over the past 5 to 10 years. Why do you think there is so much investor interest in Black founders now? And what do you believe investors have been and should be doing differently?
I mean, I think Melissa just made it plain and clear. Unfortunately, it took the tragic situation that was the murder of George Floyd to reawaken the entire country on kind of the social injustice facing the Black community. I think beyond just police brutality, it made everyone take a deep look and reflect on just the economic kind of ecosystem facing the Black community. And that really starts with the large wealth gap that exist within our community. And then when you peel that layer back and you look at Black founders, Black small businesses, and to your alarming stats, women leading these businesses and trying to access that capital to expand and grow their businesses, it's just unfortunate. It was sad. And it was something that I think shook up this fundraising community in a good way. I'll definitely say, Melissa said, hopefully you had it a little bit easier, maybe a smidge, but it still was a challenge going on that journey in a post George Floyd kind of world, in which we were still trying to convince investors of the market opportunity that existed, of not only, being a Black founder, being a Black woman, and being capable to lead a business and help it scale and grow, but also because we were creating a product specifically for Black people. And so I think, while we had investors more open and willing to have those conversations because all of these stats were coming out that were so alarming, there still was a sense of hesitancy about placing that bet on you and your business. And so while I say, for us, we were fortunate to still be able to navigate that accordingly, I know for some founders, it's still a challenge. And hopefully in the years ahead, we'll all do better, but it's going to take a little bit of time.
Yeah, I mean, I would echo that. I think, you asked the question, why do you think there's so much interest? I think it's because they finally realized we existed. I think data has its pros and cons. And I think when you look statistically, it's almost like we're not there. And so I think there was no incentive, no impetus for people to even look for us. But I think about, the political power that was yielded when this happened, and we were everywhere, like little Black faces everywhere. I think, the power of brand, when Beyonce puts together a list and people see it and everybody was scrambling, I think there was a reality of like, wow, like Black entrepreneurs exist across multiple sectors, and you had companies who were taking bigger bets, and it wasn't just Black History Month. And so I think that there was this awakening and awareness of companies that oftentimes had probably tried to contact these offices and were told no, or didn't have a direct contact. And so I think that there was this recognition that we existed. I think what they should be doing differently is consistently looking for us and checking for us. I think the other piece is understanding our industries. I think, what I've seen is that a lot of entrepreneurs are getting calls, but our journey is not the same. And less than 20% of all Black businesses right now are in tech. So we're in CPG, we're in health and wellness. And there's an angel group that I won't name who said, I want to invest in Black entrepreneurs. And I sent them a ton of them. And I said, well, you're not making investments. They were like, I don't think we really understand. And to their credit, we then went out and got the CEOs of some of the largest Black hair brands and said, could you please do some informational sessions with these women? Because they really want to invest in Black women, but they had no idea. And so I do think that we have to recognize there's an uneducating process that has to happen, that you have to put aside all the myths that you have. I think there's a re-education process, and know that our sectors look very differently, and that you have to then also talk to us. I think we are a very tight-knit community, and we, we're here to help. I think it's less competitive and much more collegial, which I think is surprising to some investors, because it's like, hey, you don't want to fund me? Great, but let me tell you about Cora. Let me tell you about so-and-so. So I think they would actually find that the top of funnel actually is a lot easier when you try to seek out Black founders, because we are very communal in nature, and we are willing to put each other on and share props. And we're very clear about our competitive advantages, and we're clear about, where we have a foothold in the market. And the final thing I would say is, I think that we are in the midst, though, of having a similar struggle that women had, which is when women entrepreneurs would start businesses for women, the white male entrepreneurs would say, let me call my daughter or ask my wife, because I don't understand this market. Well, you got to understand the market. And I think that what happens is, and I won't say all, but at least most of my fellow Black entrepreneurs, we are starting businesses that start in our community because that's what we know best. Unfortunately, most other people don't know our communities best. So people have got to better understand our community and the wealth that exists there, the loyalty that exists there, the consistency, understanding understand our distribution channels. And I think that's a lot for some people. So I would say that, that the investors need to take the risk, uneducate, re-educate, and be patient. This is not going to be, you're not going to understand our ecosystem by the end of 2021 because it's nuanced across all of those sectors. And people have to just, really re-educate and research to understand how to invest with us.
Mm-hmm.
Sure. It's interesting you said that, because a lot of the challenge in venture capital is that there is this term called pattern matching. And what we find is that so much bias lies within that term, and it's often used as a cover up as to why certain founders don't necessarily make sense. At Citi, we dig into a lot of data, and one of the things that I've found is that the demographic breakdown of the founders that are receiving venture capital actually mimics the demographic of the investors themselves. It doesn't mimic the global population. So one solve is increasing the number of Black investors that are not necessarily saying intentionally, okay, we're going to only invest in Black founders, but are saying, I can look at you through an unbiased lens and see the value in your company.
Mm-hmm.
So that's another solution that I think about a lot, and I think a lot of other people are as well.
Yeah, and sorry if I can just
you're
add
fine.
on to
Go
that.
ahead.
I think what Melissa said just resonates with me so much in terms of investors actually taking the time to educate themselves.
Absolutely.
On the market, the opportunity, pooling other brands, to your point, Melissa, that are in that space and operate in that space so they can get smarter, and not feel like they have to just shut you off because they don't get it.
Yeah.
I would say, based on my experiences, even coming from a corporate background, understanding how to articulate myself, how to present, how to pitch, all of those things still didn't make up for the fact that they didn't understand the specific industry, or they didn't understand the market and who we were targeting, the consumers we were targeting. And so it's hard when you have founders that don't have that background, that don't have that professional experience, aren't equipped to be able to articulate themselves in a way that can convince an investor of something that they don't understand. And so it's overcoming, I think, helping founders, Black founders, overcome that hurdle, not only with just equipping them with the tools to be able to have those conversations, but also ensuring that investors are educating themselves on the industry, the brand, the opportunity.
Sure. That's a very good point. I want to stay on the topic of Black women raising capital. So this year, Goldman Sachs actually announced an initiative to invest $10 billion in direct investment capital to address the disproportionate racial bias that Black women experience both in and outside of entrepreneurship and fundraising. From both of you, I would love to hear about your experiences, fundraising and building your companies, the good, the bad, and the ugly. And I'd love for you to talk about some experiences and challenges that you believe are unique to you as Black identifying women of color, and any thoughts and insights on potential solutions.
Yeah, so I'll just start because I do have the privilege to be on the advisory council for the 1 Million Black Women Initiative at Goldman Sachs.
Wonderful.
And I would just say to this group that, I trust that good things are going to happen. But I want to just take a moment to honor the significance of the commitment, not just that Margaret Anadu, who is the highest ranking Black woman there, is leading it, but that it's $10 billion in investments, which is the largest commitment that has been made to the Black community to date.
Absolutely.
It's $100 million philanthropic, which is great, but that's real investment dollars. And that excites me because to answer your question, the experience that I have as a Black woman is people don't understand the complexities of my life. I have 6 kids. I have a wife. I care about my community. I sit on boards. I go to PTA meetings. I also care for my 92-year-old mother. I am fully financially responsible for her. I am responsible for her health and well-being. And so, people talk about the sandwich generation. I think we are the sandwich and the buffet together. The concept of Black tax, I'm very blessed, I'm very privileged, but the burdens that Black women carry as being both the matriarchs of their homes and the matriarchs of their communities cannot be underestimated. People call me because I'm older. I was one of the 100 kids, Black kids at Georgetown. Every Black kid at Georgetown, like, can I talk to you? Oh my God. And I don't say no. Now that's frustrating to my family, but I think that there is an innate cultural sense that I need to give back, which I think is healthy and to some extent, but a lot of other communities don't understand that. And so when they say, well, you have all these roles and you do all these things, I'm like, multiple roles, one goal, help my community. And so I think that people don't understand the complexity of what it means to be a Black woman. I don't think they understand all that we are juggling. I don't think most people understand just the concept of Black tax in general. And I don't think that they understand that the inequity that exists across systems. As a Black woman, this is really crazy, but it was harder for a moment for me to find the COVID vaccine than it was to raise money. It is even harder to make sure that my kids are able to be in school. And so I think that it's almost like this is old school, but back when you used to have equalizers, like the buttons are always going up and down. There is no steady state. And the fact that, I feel like it's a constant battle sometimes, like, how do I get my mom vaccinated? How do I get myself vaccinated? How do I go raise money? How do I make sure my kids are okay? How do I make sure everybody else's kids are okay? And I think that people just don't get the toll that takes emotionally and physically, which I think shows itself and demonstrates itself in our mortality rates and our sickness rates. I think it's appalling that, we are in a state where Black women are going to be, I'd say forced, but are stepping up to say, this vaccine is not the new Tuskegee. I think that we are leaders in the community. Look at the WNBA. I'm privileged that my best friend is the head of the Players Association. That is the plight of Black women, right? Of being extremely underpaid, but literally changing the political landscape of this country and getting no credit whatsoever. So I could keep going, so I'll stop there. But I think that the biggest takeaway is that it is challenging, it is complicated, it is unending, and it is unnerving.
I can imagine. Absolutely.
Man, Melissa, I don't even have anything to say after that. Like, you literally summarized everything for Black women. The only thing that I'll add, and you touched on this, is just this label that we automatically get of being strong. And so feeling like every time we step into a space, every time we have that pitch meeting, that we have to come in there and be so strong, be so confident, that we have all these still insecurities that we're dealing with. But because of this label that's placed upon us, and this feeling like we're carrying all Black women, all Black people on our shoulders, it's tough. And it's draining, and gives you mental fatigue, emotional fatigue, that I don't know that any other group kind of deals with. And so that's just a part of all of these layers that we as Black women have to go through, and then compound that with the fact that we're founders and entrepreneurs. There's a lot going on. There's a lot going on there.
Sure. And then based on your experiences, Cora, and I'm sure, you've probably experienced some level of challenge during your fundraising process. What do you think either investors that you've met with or other investors in the community could do differently as they try to attract more talented Black female founders and also invest in more talented Black female founders?
I think it's just that understanding piece, the recognition of kind of what we're facing, what we're going through, the recognition that there is that Black tax that Melissa talks about.
Absolutely.
And just the grace that comes with, if you didn't nail it the first time, or if you slipped up, just the understanding, that grace that comes with, second chances. Those conversations are nerve-wracking. They leave you anxious. And so just having investors recognize that you're kind of having all these things going on because you want to impress them, you want to, do well for your community, you're trying to build your business, you're trying to support your family, like all of those things, recognizing that we come in with all of that baggage, and providing us that kind of that grace in case it doesn't go well, to reconsider or to have a second chance, that can come, and maybe good things can come from that.
Sure. It's good that you guys mentioned the Black tax. One other thing that I think about as it relates to VC is the Black discount when it comes to valuation. Black founders are also raising fewer dollars because their companies are seen as far less valuable than their competitors who are creating a comparable product or developing a comparable service or in a comparable category. I believe that self-assessment on the side of the investors is another way to course correct that issue. I wanted to point to a study next that was actually conducted last year. A study conducted by the Kaufman Fellows and Mac Venture Capital cites that after early stage financing rounds, so this is after Series A and onward, diverse founding teams actually raise more capital per round than their counterparts. What unique skills, cultural assets, and values do you think Black founders bring to the table?
Sorry, you want me to go, Melissa?
Go ahead, go ahead.
I was gonna say, Black founders have this unparalleled sense of hustle, of grit, of resilience, of grind, and just energy that we pour into our businesses, because for us, we can't fail. We know we have the community on our back, we have our families on our back, we sacrifice our personal finances to make this work. And so with just being that, based on our experience, our cultural experience, based on, not having access to wealth, we're doing this because we want to change that trajectory for generations to come. So we will give our 115,000% pour into our businesses to ensure that we make it work. And I think that's definitely, I don't think you see that from any other group than when it comes to Black founders.
Absolutely.
I would agree. I mean, I think we are oftentimes overprepared and under-resourced. I think we're certainly over indexed in terms of experience and skills. And I think part of that is because, at least for myself, you have to be 150% better. And so I want to echo, I think we are extremely well prepared. I think we know our numbers inside out. I think we enter a conversation expecting no, and we've already got all the rebuttals and the answers. And that's not to take anything away from any other founder, but I think it means that we oftentimes are way more prepared. And I've seen a lot of pitches in my life.
Yeah.
And I think we also are better at strategizing what if scenarios. Because there's no certainty that we walk in, somebody's going to write a check for $1 million. And so we are very comfortable with scenario planning. Women in particular are always better at investing. That's been, we knew
Absolutely.
we had the great crash if women were the lead investors on Wall Street. So I think that there is an element of ambition, but with conservatism, because we're so used to operating in a position of lack. And I think that there is a level of analysis and depth that, as a professor, I would say my MBA students take for granted because they don't have to. And so I think the bar is always higher within our own community, that we overachieve. And I think sometimes that's scary for people.
Absolutely. Absolutely. To that point, I'd like us to brainstorm for a bit. A key focus in impact investing in particular is finding the most effective way to measure impact. When we look at investing in founders of color through that lens, how do you measure our impact and our outcomes after we write these checks? And I know it's not an easy answer. In some instances, people think about residual impact on the communities that we're in. Of course, there are financial returns. One thing that I like to think about from the perspective of the City Impact Fund is I prefer to make sure that we invest in founders that have diverse teams, that diversity does not just sit at the top where there's you know, a Black founder, an Asian founder, and a white founder, but everyone else on the team is not diverse at all. I think there are multiple ways to think about how our dollars are making impact other than thinking about our financial returns. I don't know if you guys had any additional thoughts on that.
You know, I will say, I teach impact investing at Georgetown, and I think that, you know, there's a healthy friction and discussion in the impact space. I think impact is typically, it's always been, you know, the E has always been easy because it's easily to quantify. I think
Absolutely.
the S is where I sit as a Black founder, and it's hard because the needle is moving, but it's not much, right? If I'm trying to change the wealth capacity of an entrepreneur on our platform, it's going to be 0.001 plus 0.001 plus. But that's also because we're pushing up against systemic racism and other
Sure.
barriers and institutional challenges. And so we look at things like job creation. We look at things that, you know, increase revenue, traction, business growth. And we do that not just because it's an absolute value, but knowing the entrepreneurs, we know that those are all signals to how they're going to reinvest in the community. So we look at how many jobs have you created, and we say, how many jobs have you created in a community, and what is that salary, and extend it out to what is in the economic contribution in that community. You know, I think it's important that we don't overcomplicate it. I do think that there's something to be said about this exercise of let me quantify my impact. I honestly think with the fact that the majority of new entrepreneurs in this country are Black women, that an investment in those Black women, just straight to the bottom line, has a positive impact on the overall American economy, period. Because the venture capital world in particular, but I'll include banks for a second, have not invested in Black entrepreneurs. There has been over $300 billion lost in GDP because of that underinvestment. And obviously the Citi report talked about 16 trillion. So
Absolutely.
I think, you know, there's the biggest impact. If you don't invest in a group that is actually the largest in a particular community or country, that there's a negative drain that is happening from an economic and security perspective. So I think, you know, there's the minutia of like, what is your business? You know, how many young men are improving self-esteem? You can't even count that with Young King Care, right?
Sure.
To walk in and be seen is huge. And then I think there are kind of the quantitative pieces, but a lot of it's going to depend on, you know, where are you going to be focused on assets? Are you going to be focused on wealth? Are you going to be focused on the economics, or is it more qualitative or quantitative?
Sure. That's a good point. Cora, did you have anything to add to that?
No, I'm gonna defer that response to Professor Melissa Bradley, who always always just nails it. That's exactly right.
Thinking about where we are today, given the pace at which things are moving, the direction we're going in terms of more venture capital dollars going to Black founders, looking forward 10 years from now, what do we think the fundraising ecosystem looks like? And how do you think or hope things will differ from where they are today?
Yeah, I mean, I would hope and I think that it will be a much more transparent process. Even before kicking off our fundraise, I did some workshops just to, you know, get ready to raise funds. And it was always like, you have to know someone who can do an introduction, and you have to write the email this way. And these are the 5 steps you have to do in the meeting. So I just would hope that as we get better, as this investor, entrepreneur, fundraise ecosystem improves and evolves, that it would just be a much more transparent process, so people don't feel like they're not in the know and they don't understand the game and how to play the rules of the game, because there was all these rules that you had to follow just to even get a call back.
Sure.
So I would think that that would change over time, because the system, the way it was set up, was that non-people of color would win or be more successful in that system or make greater progress or take more strides. And so if we can just kind of break it all down, shake up the process, then I think we can definitely see more Black founders, people of color succeeding in this kind of ecosystem.
Great.
Yeah, I just want to double up on the enthusiasm. You know, what's happened over this past year, There have been $3.2 billion raised by VC firms, at least one Black investment professional in 2020. So that's more risk capital that we've ever had in the hands of Black investment professionals. That's a 129% increase since 2017. And so I think hopefully that is a signal that there is both capacity, there is experience, and there is opportunity to put the money in the hands of Black GPs. And I'd also say on the entrepreneur side, this has ironically been the year where the Black unicorn, right? Calendly came in with a $3 billion valuation.
Absolutely. Flutter wave.
And in 2020, $900 million has been raised to date by Black entrepreneurs, and the median deal size has been 1.2 million. So I think that's, so, if 10 years from now, I mean, with some level of temper of enthusiasm, it took us 400 years to get to that. I'd like to believe that Moore's law is now in motion, and that will at least 100x that in the next 10 years. But I think the beauty of the fund structure is that as long as it's successful, it keeps going. And so knowing a lot of the new Black fund managers, I'm optimistic that there will now be institutions that will be around 10 years from now that respect the span from seed to private equity, that
Absolutely.
are Black GPs who will have a sense of permanence, knock on wood, that they meet the returns, which I think they will. And at the same time, the LP community continues to educate themselves, as we talked about, and recognize the value that exists in our community, and that median check size gets bigger and bigger.
Absolutely. And Cora, you actually brought up a really great point in terms of making sure Black founders are effectively prepared for these investment meetings before they go in. Part of that is actually the job of the investor. Investors are also coaches to entrepreneurs. And if we're doing our jobs well, any founder that we've been speaking to and that we bring to IC should know what to expect. When you think about that, what are some other resources that we, the investor community, can make available to Black founders to increase their opportunities for success in terms of securing capital?
Yeah, and Krista, I love that. That's how it should be, right? And that's exactly how it should be. The investor kind of pouring in to help that entrepreneur. One of the things that was really critical to me as a part of our fundraising process was just the financial aspect and piece, the projections that you're crafting, the assumptions that come with those projections, P&L, making sure you understand that and how to put that together. Sure. So all of the numbers related to kind of the financial management of your business, I think that's an area where we sometimes fall short, and we just need guidance and help with that. Going through 1863 program with Melissa and her team, like, we talked about that all day long. Like, cash is king. I still have that written tattooed on my forehead. So I think, in having these conversations with the potential investors, instead of kind of shunning people because they don't have it right or it doesn't look right, understand, talk to them, help them get it right. So that they can be prepared, if not with you, for your investment with the next investor.
Absolutely. And Melissa, did you have any additional thoughts on that? It sounds like you've been doing a lot of this at 1863, so I'd love your insight.
Yeah, I think there's a couple things I will say. I think when it comes to helping and supporting Black founders, I think one, we have to throw out the pattern recognition, because not all Black founders are the same either. Yeah. And so I think that part of this herd mentality in the VC space is, let me see as many people as I can at top of funnel, and maybe somebody good will race to the bottom. That doesn't really work, because I think, when I think about the group that Cora, the cohort that Cora was a part of, they were all amazing companies. I think Cora and one other were the first to get funded, but that doesn't mean the other ones won't get there. And so I do think that there has to be more time spent on understanding the person's journey, because our journeys are so personal, but they're also so integral to the trajectory of the business. I have yet to meet, and I say this honestly, a Black or brown entrepreneur who says, I'm doing this because I want to sell the company. That may be a goal, but the intentionality behind that is so not because I want to be a millionaire or a billionaire. And I think that's important because it is that intention that drives the trajectory of the business. And I do think where friction points come with investors, because you haven't really understood what my journey is. As an investor, I believe my job is to provide the fuel to your car, but not to be the fuel and the GPS. And I think too many times there's a belief that we don't know what we're doing. And so you're the fuel and the GPS and the whole thing just stops on the side of the road. And so I do think that there is a need for folks to understand the individualistic nature and drive and desire of these businesses and the communal impact that the entrepreneurs want to have. I also think it's important to understand that how we define market opportunity is very different. There's not a lot of data about the Black community, or at least not positive data. And so I find that the biggest challenge I'm facing is that there's not a lot of comparables. It's really sad that in 2021, we're still doing onesies and doozies. And that's great and something to celebrate, but not great when you're trying to make a financially sound and statistically relevant argument on why this company has the capacity to do well. So I think those are the only things I would add. I think it's to me, it's always less about the entrepreneur. It's more about the system. And I think the ecosystem has not done a good job of keeping up and really tracking data. And I'll say this because I think this is a group that has the capacity, but some of us individually have been lobbying for PitchBook for years to track data by race, and they won't. And I totally get why. But I think we have to move past this, that race is something to be afraid of, and understand that there are benefits in course correction. There are benefits in doubling up on investments where they've worked by being able to track race. And so we've got to put that at the center of the conversation, not to be the elephant in the room, not to be something that scares people, but allows us to have an honest conversation around what are the differences between companies and where they're going to end up.
Absolutely. I think a lot of that also comes in the form of really honest, engaging, and thoughtful conversations with Black founders. A comment that a founder made to me this week actually is that we, meaning the Black founder community, feel like investors talk at us and not to us. And I think it's really, really important to somehow get around that if we actually want to make some progress in that area and execute on some of the initiatives that you guys have addressed. My next question is, if both of you had one piece of advice for any investor looking to take a more equitable approach to their investment process, and I just mentioned one thought, but what would that be from your perspective?
For me,
Sure. The question is more or less, what could they do differently during the investment committee conversation?
I think even before getting to that step, it's a true reflection and evaluation of why this is important in the first place. If you're going into these conversations with Black founders just because you need to check it off the box or it seems like the right thing to do, then that doesn't help anything. This is not going to solve the problem, the inherent issue at hand. So it's just this genuine knowledge searching, trying to understand the kind of the plight of Black founders and why that matters specifically for you and your fund before you can even get there. So I think it just takes some self-reflection before jumping in to say, I'm going to help. Figure out the why. Why are you going to help? And I think starting with that, then you can back into all of the ways in which you can help.
Sure.
Yeah, I echo that completely. I think, at 1863, we actually put together a guide for investors who wanted to support Black founders. And Cora was part of that town hall where we said, stop guessing and just talk to some Black founders. Stop asking the intermediaries, just talk to them themselves. And a few quick things that came out is one, to really understand the significance of structural racism. The blame game and understanding, well, why don't you have this or why are you not there? It is not for lack of intent, desire, or capacity. It is truly because the glass ceiling that we are so comfortably talk about for women exists at a much lower level for Black folks. And it is persistent and consistent, and it ain't cracking just yet. I think there's been some cracks, at least in the glass ceiling. I think the other thing is to be aware of what is universal versus what is contextual.
Sure.
I think people tend to live in this world of data and assume, I've showed up in places and they assume that I should be downtrodden and on welfare. And when I say I have 6 kids, they go, oh, and I go, Yeah, but all my kids have, like, the 4 that are gone, they're gone. They went to
Yeah.
college, they got jobs. There's nothing downtrodden. I'm very fortunate.
Yeah.
And not because I'm trying to stand out, but it's like, we're not all the same. And so I think that's
Absolutely.
extremely important. And then the final thing I would say is to look at this from an asset-based approach. To Cora's point, this should not be check the box because I'm trying to fill my guilt bucket, or I'm trying to make up for past reparations or whatever. That this is an asset-based approach that literally statistically says, as the fastest growing businesses, that this is where I need to be with the purchasing power of the communities that we represent. I'm just baffled that more money is. I mean, when you talk about hair care in the Black community, like, I just don't understand why it took Cora so long to raise some money.
Absolutely.
And then the one thing I would say is, what we recommended was, you has to be some flexibility, not in terms of returns, but in terms of timelines. There is no way in the current construct that neither Cora nor myself, with any amount of money, are going to be able to scale the types of businesses people expect in 3 years, because people aren't taking our calls to be able to scale. Partners are not rolling out the red carpet saying, come work with me so that I can increase my top of funnel. We're not getting the same deals on various types of technology and e-commerce plugins, et cetera. And so it's just not going to happen that quickly. We will indeed generate those returns, but you just have to, again, be realistic in terms of what we're facing. I always say, like, the path of a white male entrepreneur is flat. The path of a white female entrepreneur is like a little molehill. The path of a Black male entrepreneur is like a little mountain. The path of a Black woman is like Mount Kilimanjaro
Sure.
at a 90-degree angle.
Sure.
And I think people have to just understand that trajectory, and that it's not personal. It's not our fault. And so I think the one thing you mentioned, though, is, and Cora mentioned, is spending time. And I do think, again, in this world of venture, everything is, we're in the midst of raising, and I'm like, what did you really get out of a 30-minute conversation? Like, you check some boxes. I said, nothing personal. I don't think you're going to invest in this anyway, but you don't really even understand the business, and you don't understand us. And so I do think that it takes, not just for Black communities, but all, a radical reformation of the venture capital world, that everything cannot be one and done, and that speed does not generate greater return. But it is really about relationships, et cetera.
Absolutely. Absolutely. And just thinking about the business case around investing in diverse founders, and you mentioned this and alluded to this, if there's any group that's contributing to the US economy exponentially faster at a higher rate than any other group, and you're not investing in that category, you can't call yourself a good investor. You can't call yourself a savvy investor. So that's also worth thinking about for the investors that have a harder time wrapping their head around doing this from the perspective of, this is the right thing. Well, let's say you don't want to take that route. If you're specifically taking a return route, as a smart investor, it makes sense to make sure that your portfolio is diverse. So I think you guys made really, really intelligent points, and I just wanted to add that one. I want to take questions for the audience. We have about 10 minutes left, so I'll turn it over to Mabenti to accept any questions or share them with us.
Fantastic. Thank you, Krista.
Sure.
We had a couple of questions that came in. How do we change the narrative that investing in Black women founders isn't risky, or is risky, rather?
Well, I don't know that we can, because investing is risky. I guess, I love the question, but there's an irony there, because that's the nature of investing. It is risky. I think to me, the narrative needs to be, investing in Black women is no more risky than investing in any other business, but investing is risky. So I want to be respectful to whoever answered the question, who asked the question, and I would love to have an offline conversation further. But I think you can't de-risk any business, and I think it's interesting, because I think the presumption is it's harder to de-risk a Black business, but the reality is we overcompensate for that. We do all the de-risking ourselves in the middle of the night when our kids are asleep before we even talk to somebody. The number of hours that the Black entrepreneurs, particularly Black women, put into preparation before a pitch. I hear my students go, I've got 5 minutes. I'm going to review my notes. No, it's like days. It's like months. And so I think we have actually done the de-risking that makes us a much better proposition than somebody else.
Thank you. Fantastic. I can pose another question that came in, Krista, as well.
Sure.
What initiatives are in place to grow the number of Black investors?
So I had responded to that quickly in the chat. Black VC, which is founded by Frederick and Sydney out of Silicon Valley. There's lots, but that is probably the one that is most predominant right now. It is a model where it is a membership group of Black investors from around the country. There are local chapters that are designed to build up pipelines regionally. So I sit on the one in the DMV that is designed to kind of cultivate new Black leadership that want to be GPs, whether they want to live in larger firms or they want to start their own funds. And so that's one way. It's kind of a social networking. And then they also run something called Black Venture Institute, which is coming up in April. It's a rolling admissions. Everybody is welcome. And it's a series of opportunities with big VC firms, small seed funds, Black entrepreneurs, just helping them understand from like, what is the context in that journey to how do I actually do DCF and look at the numbers and do due diligence. And so it's a great training ground for anyone who's interested in becoming a GP and supporting Black GPs.
And then Mabenti, I saw some additional questions in the chat, actually. I'll just take a look. Can you lead us to funds that specifically finance Black businesses? Well, you know, I would hate to do a plug, but I'll talk about Cities Fund very briefly. We have more than $50 million available to invest in Black founders. One of the advantages of the Black Entrepreneurs Fund specifically is that from a thematic perspective, the company's business doesn't necessarily have to sit within the 4 themes that our impact fund focuses on. And we also have a lot of expertise and support from our core traditional venture fund. So we're actively looking for great Black founders. We're welcoming incoming asks and requests, and we're ready to write checks. So that's one fund worth mentioning. There are other funds that I'll say don't specifically invest in Black founders, but do a far better job at investing in Black founders because they have Black GPs. So there's Precursor Ventures, there's Backstage Capital, there's 1863, there's Base Ventures, there's Mac Venture Capital. There are several funds that are actively writing checks to Black founders.
I would just plug one of the early ones that Cora and I both know, which is also New Voices. So Richard Lou Dennis, after he sold his company, started the $100 million fund specifically for Black women. So there's a ton and hopefully more to come.
Absolutely. And Crunchbase actually published a Google spreadsheet called the Black VC list or the Black founder list that actually includes a list of Black founded businesses along with the investors that wrote checks into those businesses. It's worth just Googling
Just dropped it in the chat,
Crunchbase.
Krista.
Oh, wonderful.
Yep.
Fantastic.
Yep.
And then Mabenti, did you have any more? If not, I can read another question from the chat here.
Yeah, I think we have our another questions in the chat, but no other ones that have come in yet. But yeah, I think that the question in the chat would be really great to answer.
Fantastic. One of the questions that I see is, what book or other resources would you recommend for us to better understand the Black VC and founders experience? I just want to say that is a bit, I have a recommendation, I'm sure you guys too, but it's a bit difficult given, you know, Black VCs and founders are really crunched for time given the hurdles that we face. So I'll be surprised if there are many books written about this, but I'll actually let you guys kick it off first.
So I will just recommend, she's a friend first, Cheryl Conti and her book, Mechanical Bull. We actually gave it away at one of our town halls, but she is a 3-time Black female exited entrepreneur, tech founder, one of the early ones. And so she took time to actually compile her journey. It's funny, it's light, but she also now consults with many large LPs to help them better support Black founders. So that's an easy one, and you can get it on Kindle or wherever else.
Great. I would personally recommend, this is a book that was published, I believe, in the 1990s about a founder, the founder of, he actually founded a private equity fund, but Beatrice Foods was one of the main companies that he was known for. And it's a book called Why Should White Guys Have All of the Fun? The book itself is about one of the first Black multimillionaires in the US, but it also highlights his journey to raising money as someone who actually had a JD from Harvard. So as we all know, it's very difficult to either out-earn or out-learn racism, and that's something that's very clearly outlined in this book. However, there are opportunities to overcome these obstacles, so I would recommend that as a great read as well.
Thanks for that reco. I wrote that one down.
One thing that I also just, since we have 4 minutes left, wanted to ask, from you guys, we've given a lot of advice to investors. There may or may not be founders on this call or investors who want to give advice to their founders. What are some things that you guys wish you would have known prior to fundraising as a Black woman or as a founder in general that you believe is incredibly important for other founders to know, particularly other founders that look like you or share your experiences?
I think my big lesson from last year was just pace yourself.
Sure.
April 25th, 2020, I had a stroke due to a heart condition that I did not know I had. I knew something was happening because of my Apple Watch, but that was it. And why didn't I know? Because I didn't go to the doctor, because I took care of my kids first, because I was working on the weekends, because everything was about work and business. And I think that's important. And I think, a business is nothing more than the best possible manifestation of its founder. And I think too often Black women in particular are not allowed to take care of themselves. If you take a day off, oh my God, well, that's not a hard worker. And so I think that's my biggest thing, that we are all humans, we are all people, we all have our challenges, and that self-care is the most important thing that an investor can support and advocate for, because if the founder's not there, then there is no company.
Absolutely.
It's a really good one, Melissa. I would add just surrounding yourself with advisors, with mentors, with individuals who really champion you and understand what you're building is really, really critical. Day in and day out, you are grinding for your company and it's draining. And so when you have that support system that can cheer you on, that can rally against you, that can kind of pick you up on those days where you don't think you can go any further, it's just so important. And it gives you that renewed sense of energy that you need to keep going. So I would certainly say have those folks in place, especially before you go on your fundraising journey.
Great. I would just like to add the book, Why Should White Guys Have All of the Fun, is the biography of a gentleman named Reginald Lewis for anyone interested in reading. I wanted to thank everyone for joining. It was such a pleasure speaking with both you, Melissa, and you, Cora. I look forward to collaborating in the future. For anyone in the audience, please feel free to reach out with any questions that we may be able to help answer. Again, it was a pleasure speaking with all of you today.
Thank you so much. Appreciate it.
Great.
Of course.
Yes, thank you.
Great. And I just want to thank Krista. Thank you so much for the great moderation.
Sure.
And thank you, Melissa and Cora, and everyone who were able to join today. After this call, we're going to share the recording of today's webinar, and certainly we can share any contact details for the panelists. And thank you for sharing it in the chat here. You will see the email addresses of everyone. So thank you for another Impact Capital Forum discussion, and we look forward to forthcoming discussions on this new development.